Hi friends, in this video we are going to cover why it is important to keep your charts simple and your trading process simple too. So let us begin. So do your charts look like this? I mean, obviously for this example I've plotted a lot of indicators over here, but lots of color splashing over everywhere, and there are so many lines and so many things on the chart that you are not even seeing the price clearly. If this is how your chart looks, then definitely it is not something which is ideal, and we should try to improve this. So, and why basically this is a problem? So this is basically if you are having so many indicators on your chart, that means in your mind or you have a belief that somehow the market is something that has to be understood, or we need to be able to, based on these indicators, predict whether the price is going to move up or down, and these indicators will help you figure that out. It will help you predict market movements. That is the core belief behind this. And actually all these indicators, or 99.5% of these indicators, are lagging indicators. So to give a simple example, if the train is going to leave the platform at 10 a.m. in the morning and you have to catch it, the indicators will let you know at 10:05 a.m. or 5 minutes after 10 that the train is going to leave at 10. So most of the times, by the time you get these signals, the train has already left the platform and is at such speed that now if you go and try to catch that train or try to get in on that moving train, there is a high probability of accidents happening. So ideally, this is not a scenario that one would like in our real life. Then why do we have, or why do we use this on our charts, right? So it is important that you make your charts simple, declutter them, and use as many minimum indicators as possible. So the indicator can be any which you want to use, but try to make it what I would say, only one or maybe perhaps two indicators at max. Anything more than that is really overkill and is not required. So I generally point or kind of have only the CPR and the daily pivots on my charts. Apart from this, I don't have them, and even these, what I do is I will go and kind of in the settings reduce the visibility down to almost negligible, so that while the real-time trading, I just kind of get a slight glimpse of this, but it is not very dark. And why I do this is, what happens is, if you have these dark lines plotted around on your chart, then when the price is moving, you think that it will not break it, or if you want to take a trade and there is a line close by, you will not take it because you think that, oh, there is a resistance over here, but it may just break it. So these lines should only be for reference purposes, to identify positions where you can search for a low risk trade. But you should not, kind of make a belief that this is not going to break ever. So almost every day you will see these areas are do get broken. So you should have that open mind that these are just certain like a structure you are putting in place to help you trade, but they are not like going to be adhered to all the time, 100% of the time. And the other thing is, keeping or having these clean charts will help you read price action that is happening throughout the day. So, and that is more important. Price action is basically you getting the know that the train will leave at 10 a.m. from the platform. So it is a bit difficult to get a hang on earlier, and that's why people kind of flow towards indicators, because they think that I don't need to do all this analysis. I just need to see that is it overbought or is it oversold, or some above this line or above 20, ADX is above 25 and all that, and that is all I need to do. But that will not help you in the long term. You need to develop an instinct around price action, and for that you need to spend time in the market and watch the market unfold. So even if you are not taking trades, or if you are a beginner in the initial stages of your trading journey, what I would suggest is you choose a kind of any instrument, just one instrument, maybe let's say just Nifty, and you need to log in every day and look at the charts as the action is unfolding every day, and try to identify trading zones or low risk trading points, and see if you are able to figure it out, or what mistakes you are doing, write notes around it, and that will slowly and steadily develop, automatically develop a price action kind of instinctively you will start understanding these things, but it requires time. So after a few initial weeks of doing this paper trading, actually paper trading doesn't work much, because you will see lots of success in paper trading, but when you actually get into real-time trading, you will understand that psychology plays a huge role in what in the trade outcomes, and that can never be kind of practiced by doing paper trades. So once you get a hang of things, and once you think that by in paper trading you can be profitable, then I would suggest that if you are tracking Nifty, you should try and buy OTM options which are cheap, like 15 rupees, 20 rupees options, not because you want to make money, but because you want to learn the habit of taking a trade, being in a trade, understanding the psychology of being in a trade. So you assume that you are going to lose money over there, but you want to lose just 4 or 5 rupees per trade and close your trades. Or if you make money, you want to make 4 or 5 rupees and close the trade. So basically at the end of the month you should not be in a loss of more than 2000 or 3000 rupees. That should be the max loss for you in a month if you are on the losing side. If you are making money over there, then slowly you can come to the actual trading, take correct p I mean in the money, or just at ATM options and try to trade with one lot and see how it's working out. But if you are losing money, you should not lose more than 1000 rupees or 2000 rupees at max in a month. And that is the fee that you will have to pay to the market to learn. There is no workaround, because unless and until you be in a trade, you will never get to learn the psychology and the trade management and risk management principles. So this is what will help you in the long term. And you need to understand that any other profession you do engineering, you be a doctor, or any other profession, you need to spend some time learning those things, and you have to pay a fee to the educational institutes. Similarly, you will have to spend some time trying to learn price action, and you'll have to pay certain fees to the market to learn it. But what you can control is how much fees you want to pay. There are people who come and buy stock futures options, such big lots, and they lose money in the lakhs. So do you want to pay that much fees, or you are fine with a 500 rupees or 1000 rupees per month for a few months, maybe 2 or 3 or 4 months at max? And that is something that you have to decide. But definitely you will have to participate in the market to learn it. And yeah, so this that was the main things that I wanted to cover over here. And the basic idea is to keep your charts as clean as possible and as simple as possible, because I think in some other videos in my trading psychology section, you can check, I have shared that when you are in the real time, when you are actually trading, your mind or your brain is basically it is functioning in safe mode. So because it treats the market as a kind of threat. I mean, it perceives it as a threat, because there is this because you don't know what is going to happen next, and there is this huge probability of you losing money and also you being proven wrong. So because of this, the mind perceives it as a threat, and that's why like it does not make rational decisions. So it is always you know it is not in sync with how the market behaves. And you need certain practice to train your mind to be in the markets, and also learn the basic principles of being profitable. That it is not understanding or not trying to predict which way the price will move, but understanding or locating low risk regions and positions on the chart, where if you win, you will win big, and if you lose, you will lose small. That is all what trading is about, and having simple charts will help you get there, rather than you trying to have this n number of indicators plotted and waiting for some holy grail kind of combination which will be able to tell you what is going to happen next. Thanks.